All right, guys, welcome to live stream number 5. Looks like Jimmy is actually on a panel here around the same time that we were supposed to do this. So I'm just going to put it on for a few minutes, see what they're talking about, and we'll just dive in. Really curious what this is about, and then I'll get into what I want to talk about today. So. Hmm. Cool. That was good, Jimmy. That was good. Hmm. Personally, I think it's a net neutral. Um, I think digital currencies are going to negate that privacy thing. Oh. Mm. Damn, $600? Man. Hmm. Some some issues with that, but
So
I'm okay
part of
with
the
it.
argument that you hear from politicians against the cashless society is that, and I reference it more as the digital society. Once we go, everything else is connected: healthcare, transportation, your mobility. We know all of those things, but with that one unknown, that variable, which is the cash in your pocket, it doesn't create a clear picture. Once we do cash, that's kind of the full circle, and again, we go back to the ability to
cat. Don't
So I
do it.
look at neighborhoods in the very same way. I can take a digital bubble for you and Jimmy and everyone else in the neighborhood and paint a picture of what type of neighborhood that is. That can now translate into the mortgage rate for that neighborhood because I can see, 50% of those people buy pork skins twice a month or whatever, and that's a health issue. The other side of it is that I do believe that these new systems that come online can give value to fringe populations, and certainly a third of the country, which is unbanked. But we have to be part of that discussion in developing those systems. Otherwise, we will be oppressed by them. So
Hmm.
even the banking systems that were to help the mainstream years ago have oppressed many people from getting just basic things like
I
health
think this guy's
insurance.
right until you have fungible, actual fungible digital currencies,
But
which I'm
ultimately,
hoping
as
Jimmy
Jimmy
talks
says,
about.
and
But
those that participate
we don't need to
in these
sit.
clusters,
Oh, we'll see what Jimmy says, and then we'll move on. I'm actually I'm having a good time with this, and I could edit this out. I probably won't though.
that currency.
All right.
That's
Thank you, Stephen. Um, so again,
Come on.
Quick question here for the panel
oh, good.
in regards to that last crossfire as far as public financials, especially with black-owned banks being what they are now.
You mean
You mean
non-existent?
two?
Yeah, basically.
Okay.
Oh.
I just need clarification. That's all.
Yeah.
You know,
And
when we're looking at bringing black-owned financial institutions, because let's call it what they are now, because we're bringing in traditional banks, credit unions, or other financial institutions that can help us pool resources. How does bringing that traditional sense of banking into the
You have
digital age
great question.
now be able to bring people who still rely on institutions like currency exchanges to do their
I think it's a
banking per se?
great question. I think
Thank you for that question, audience.
my first reaction would be you've got to abandon your legacy mind state, right?
All right.
Jesus said
I'm
he was
gonna
going to put new
kill
wine
this,
in
and
old
we'll get
skins.
started on some of the
I think
topics that I want to talk about
ultimately
today.
what happened. People want to
But
replace
kudos to
because
Jimmy
it's
for
easy.
being on this,
The more
having this
difficult it
discussion.
is,
Doesn't seem to be too crypto related, but I think you could pepper in some crypto stuff there. Of course, this is Magical Coffee. This is a great stream if you're going to be doing altcoin trading. Highly recommend it. We can see Litecoin's popping off. We'll get into all these things later in the stream, but last night was the beginning of a very fun, I think, beginning of the roller coaster here. So we'll be watching that as we go, and we'll see how this progresses and how this impacts your mining profitability, so on and so forth. So I guess we'll do a little quick recap of what we talked about last time. Last time, the highlights, in my opinion, were the Science Guy post. So we'll touch on this again. He had a blast off date of April 24th. Obviously, it looks like things are occurring a little bit early. We are still like right here. Oh, we're actually at about 160. So we're kind of right at the cusp here. I wouldn't even call what happened yet a blast off. It's just we're still kind of floating in where we would expect to be. And I did kind of expect. Actually, I'll get into that later. But this post, I think, is the beginning of a trend upwards at near the end of April. There was some movement last night. We'll talk about it. But I think this is going to be the trajectory over the next 6 months. I think we're officially out of the bear market. So cool. He nailed it. uh, Another highlight from last week is Brave Browser. I highly recommend you guys check it out. It will block tracking downloads. It will block all ads. It also works with every Chrome extension. You can port over all your passwords, saving tools that Chrome uses. The Chrome um, app store, whatever it's called for Google, also works with Brave. I've switched over. It's great. And you can also connect your Ethereum wallet to it. You can send Ethereum. You can vote on certain proposals, which we'll talk about later. You can participate in your NCAA bracket, which mine is completely messed up, but it's been fun to participate. Um, really hope you guys download it. I think it's going to be a really important infrastructure point between legacy technology. Well, I don't like that term either. I'm making that up. Existing technology and technology embedded with crypto tools. So right now we have a browser that also allows you to make payments seamlessly. Is I think a next logical step. And I think a lot of the problems that cryptocurrency face isn't necessarily with the crypto themselves, but it's how they interact and how they butt heads with existing banking infrastructure, existing financial infrastructure. That's where a lot of the friction is. There's really no friction within cryptocurrencies. I can get transactions at Bitcoin. The longest would be a few hours, which is still faster than most wire transfers. With most other cryptos, like Ethereum, for example, you're up and running in 15 seconds, 30 seconds. So again, the problem I think with crypto and a lot of the negative arguments against crypto, I think, are actually related to how it interacts with the existing banking structure because it's so different that it's hard to do that seamlessly. But I digress. I hope your guys' bracket looks better than mine. And then the last thing that's really important is I don't have it up here, the Ethereum meeting notes. I think it's really important for you guys to check out. Plop it in there. This is going to talk about what I think Ethereum is the most important cryptocurrency in the game. Have been for a while. There will continue to be. They have the most activity. They have the most companies being built on it. The entire company here is focused around Ethereum's success, being a GPU-based computational cluster. It's important. It's important to follow how it's developing. It's important to participate as a stakeholder, as a hardware owner, in how it's participating and to be aware of what they're talking about at developer meetings and things like that. So I really, I'll put all this in the show notes, of course. But again, this is the last meeting was on the 15th. I think they do it every 15 days, so there should be another one coming up here, or maybe it just occurred, or maybe it's every month. Actually, let's find out. Oh, geez. There was a better way to put this. I thought there was a better. I thought they had something. Oh well, we'll keep it rolling. I'm pretty sure they do it every 2 weeks, which means there should be another one out or about to be out. So I will definitely keep an eye on that. We'll touch on it next stream, which will be in 2 weeks, and we'll see if there's any developments that have occurred here. But the highlights really, again, I'll talk about. We have Istanbul, which is going to occur hopefully sometime in October, which may or may not include ProgPoW, and we'll talk more about that later. And from a ROI standpoint on your rigs, that's kind of the biggest thing they need to pay attention to. Cool. So I'm kind of developing more and more structure for these as I go, and basically what I'm going to do is I'm going to open up with usually Magical Coffee, or in this instance it was Jimmy on talking on the radio, talk about some of the things we talked about last time. Then we're going to bring up what we've been mining over the last 2 weeks or since the last one. So I have 2 snapshots from our mining software here. One is from a 1070 or a Force 2.0 model, and the other one is from a 570 or an Armada model. And you can see what they've been mining and what the average revenue per day has been over the past 14 days. So this is my way of sharing with you what we've been mining. And we've been mining Ethereum, obviously. Ravencoin, there's a lot more activity on the 1070. So Ravencoin, which is X16R. Kuckaroo 29, which is Grin. Equihash 144,5, also called Zhash, which is Bitcoin Gold. Not so much of that, but it did make its way on there almost 1% of the time. These two are the same thing, so we should combine these two. Looks to see just a labeling error there. And then X17 for a moment. I'm not actually sure what the big coin of X17 is. If you're curious, I will X16 algorithm. Let's see what's the biggest one. So we did touch on that briefly. And just so X16, there's X16, X14, X16R. These are basically chains of different algorithms put together. Like X17 is Blake, Kekak, Skyne, Lufa, CubeHash, all these are algorithms that they're basically chained together to make it difficult for ASICs. And then X16R takes that to a different level and it randomizes these different algorithms so that an ASIC would have difficulty, because an ASIC basically does the same calculation over and over again, but if they randomize the order in which they run these calculations, it makes it more complicated for an ASIC to be developed, which is a type of ASIC resistance, which is the whole goal of a lot of these new algorithms that are coming out, is to keep ASICs off network, keep the playing field level. I'm actually not going to find um, which one? X17. Oh, Verge. Okay. So XVG, Verge, they're privacy-oriented cryptocurrency, ASIC-resistant cryptocurrency. Looks like we mined Verge for a brief moment there on the 1070s or the Force models. And you can see, I think I pointed this out earlier, that you're making about 474 a day on those average over the last 14 days. So profitability is going up a lot. I mean, I would think a 40% profitability bump over the last month and a half, month and a half or so. So it's great for everybody. AMDs have seen a little bit less activity. Kryptonite V4, which is Monero, is starting to get more and more active as that bubbles up, and the ASICs were kicked off, as I talked about a couple live streams ago. I'm actually curious, Phi2, are we actually mining on that Phi2 algorithm? This is just fun for me. LuxCore. Okay, yeah, LuxCoin. So I've heard of this. I actually couldn't tell you much about this particular coin, but I've heard of it, and we mined it briefly, and you sold it instantly, so you're not really too exposed to it. So it looks like a proof of stake, proof of work hybrid coin with SegWit. It looks like it has smart contracts and masternodes. Okay, so there's a lot of these kind of coins that are like that. They throw around the buzzwords. Masternodes, which is something Zhash pioneered, digital cash, which used to be Darkcoin, that would basically have nodes set up to basically, what's the word? Not funnel, but basically shake up your coins, obfuscate the transactions so that to keep, you wouldn't know what transactions were real, which ones were the master nodes, just shake it. There's a word for it, I can't think of it. So that's what masternodes originally were for. Now they're kind of just a term for you have to have 1,000 of these and you can stake them and earn interest, and it's a way to reduce liquidity to bring up the price of your coin. It may not always serve a purpose. Dashes actually serves a purpose, and a lot of these coins tend to copy some of what the bigger coins are doing. But as a miner who is just trying to get paid, mine this, get out. If it's selling well, we'll mine it and get out, and that's really the whole game. But I mean, if you're a big fan of LuxCoin, I apologize. Maybe you could change my mind. But this is just my first glance impression, just looking on their website, which I have right here. I'm not too impressed based on what I've seen here. Also, apologies for my voice. It's got a pretty sore throat. It's been cold. Cool. So let's get rid of that. And the next thing I want to talk about is, so now we talked about what we've been mining, and then we're going to now this next segment I want to bring up two things that I think are really important for those invested in the space to be talking about. And the first one is Bitcoin's market recovery. So I was actually watching the movie Us last night, which is actually pretty good. I'm not a scary movie guy by any means, but it was good because anyway, it had a lot more going on than just the startling aspects of scary movies. And I was thinking I was thinking earlier, this price went up like $50 since I started preparing for the stream, and I'm wondering if we'll cross 5,000 on stream. Oh my God, $50 again. We're wild. Just wild. So this started happening last night. We saw 20% bumps. I think it hit $5,000 for a moment, jumped back down to 4,700, and now it looks like we're going to retest 5,000 very, very, very soon here. And with Bitcoin, all boats rise. With Bitcoin, all boats fall. Bitcoin is it's 50% of all of the crypto market, as seen by here. This is the Bitcoin dominance chart. There was a moment there with the Bitcoin Cash findangle that other coins started to take some more market share. I think this is Ethereum. Oh, that's other. Ethereum's down here. So you can see, I think Bitcoin Cash actually caused a lot of problems for Bitcoin, or at least that I don't want to blame Bitcoin Cash, but that debate, the scaling debate. caused a lot of problems for them. And Bitcoin is still obviously king right now by a lot, but it's a little bit more of a conversation than it was a few years ago. So keep an eye on this chart, and you can see how much Bitcoin is going to influence the rest of the markets or the coins. But like I said, with Bitcoin, all boats rise and falls. Reload again. Went up $4 since I started talking. Absolutely nuts. But this is just the beginning, I think. And I think my comment on just volatility in general as an argument against it being a usable currency, which I totally get. You want to send the person the money, they want to know that it's worth the same amount than what they sent it at. However, Bitcoin is still in its infancy. It still hasn't reached its potential by any means, and we don't know what it's worth. I think it's worth far more, but with adoption comes stability. So right now it's obviously everyone's speculating on what it may or may not be in the future, but if we're going to be using it as a currency, it's going to have a stable value. It's going to be the goal is traded like a forex, like a currency is traded on forex, where the liquidity is high, the uses are high, there's transactions happening. The value behind Bitcoin, in my opinion, is the ability to transact globally without permission and without a third party. So, gold can't do that. US dollars can't do that. While US dollars may be backed by the US government and gold may be backed by the fact that it's a precious metal and people have been using it as a safe haven for years, since the beginning of recorded monetary history, Bitcoin has a use case embedded into its value, and that is the ability to transact. So I think that what we're comparing it to, we can't yet compare it to US dollars. We can't yet compare it to any of these other global currencies, but that's the point. That's why it's so volatile. And once we start to be able to compare them to these currencies, is when the price will start to be a little bit more stable. So, yeah, volatility is going to be like this, especially with a brand new asset class. It's not a stock, it's not a bond, it's not a commodity. It's its own thing, and we're still trying to figure it out as a society, as humanity, what it is capable of. So, and I say Bitcoin, I basically use that term interchangeably with all of cryptocurrency. Obviously, I'm a big Ethereum guy. I think that's applicable for Ethereum. Ethereum's going to add to that conversation with smart contracts, and I mean, you have your full-blown articles of incorporation on built on Ethereum and issue shares via that way, and have shareholders meetings, and there's so much more that you can do on the Ethereum blockchain that I think Bitcoin was the catalyst for. Anyway, I digress again. The next thing, so the market's obviously recovering. It's recovering as I speak. Your miners, all the profitabilities are skyrocketing. It's really exciting stuff. It was a pretty not so fun crypto winter, but where I think we're firmly in crypto spring. So I think everyone can bring the chins up a little bit. And I think what's really important to note is that while you were mining over the past year, past 6 months, let's say, when Ethereum touched at $80, I'm hoping that you had kept that as you mined it. And now, since it's back up, it is like you were mining at Ethereum was $165 the whole time. In addition to that, which means current profitability. So instead of making that buck 80 or whatever you were making per day and barely breaking even on your fees, you actually were making now 250 a day, which is or 240 or whatever that picture was, which is actually a lot more palatable, a lot more easy to deal with. And that was my whole I think point is that you can't really look at this as a day-to-day ROI. What you mine is going to go up in value, and now we can look back and it's actually we're fine. We've been in crypto spring the whole time, right? So that's just one way to look at it. If you're already into the contract and things aren't looking good, it's certainly a perspective that you can take. And in addition to that, what's really important is that look at the difficulty during the bull run here in 2018. And even here, I mean, this was a fork that killed difficulty artificially, but so basically the difficulty is skyrocketing because the price is skyrocketing. GPUs are not able, you can't find GPUs. It was difficult for our company to find GPUs, um, and it brought up the difficulty. So while the price was sky high, it was harder to earn them. Now the price has been low, so it's easier to earn them. So now when the price starts to go back up, that period where the price was low and the difficulty was low, you earn more Ethereum that are now turning into be worth more than they would have if the price was just high the whole time. So now you actually have more Ethereum. This is a long-term play. This makes a lot of sense. So if you hold on to these Ethereums during the winter, or these Ether during the winter, and you mine during the winter, the difficulty is going to go down, and you're going to be rewarded for that. And I think people are being rewarded right now, those that renewed their contracts. So again, mining is a long-term play. It's got to coexist with this trading strategy, or or you can hold and lose 95% of your value, um, which I partly did, which is okay. Again, it's a long-term play, but if you really want to maximize your strategy, your mining strategy here, you should be playing the tops of the market. But that's again, I'm not giving trading. This isn't trading advice. This is not investing advice. This is just based on hindsight's 2020. I'm looking at this. That makes sense. And the company can't do that because that would invite lots of various custodian regulations that I'm not willing to really get into. I would rather host your hardware than host your crypto and be subject to the SEC. So anyway, I digress. One more thing I wanted to talk about here was this NASDAQ article. I'm actually not sure when this was, but this particular paragraph spoke to me. Bitcoin isn't another patch. It's another layer of not another layer of abstraction added on top of an aging and over-complex system. Think about how many things have to be involved when you make a transaction. I think Jimmy mentioned Apple Pay in his on his radio show. You have a bank is involved. You've got Apple is involved. There's probably another receiving bank. Um, I mean, there's three parties right there. I mean, Mastercard is involved, or whatever the credit card is. So there's four and then whatever. No, I guess it would just be the bank on their end. Just four parties off the top of my head that I can think of for one single transaction, and it just becomes increasingly more complicated as the internet became a major tool for commerce. All these different companies had to figure out, like PayPal had to figure out a way to get people to pay each other so they could sell their stuff on eBay. So there's lots of different parties that are involved in facilitating single transactions. So Bitcoin basically takes that whole idea and scraps it, starts over. It's not another bank. It's not another payment processor coming up with new ways to move old dollars. It's a simple, elegant, and modern replacement for the entire concept of money. And this touches on earlier what I talked about earlier about what was I talking about earlier? Oh, that the issues with Bitcoin is not Bitcoin itself, but how it interacts with the existing financial system. And this, I think, is making my point. It has value for exactly the same reason as paper money or wallet. It simplifies the exchange of goods and services like a dollar was, like gold did. And not in the antique setting of a barter system bazaar, but in the current setting of the modern internet-enabled life. I mean, it's so well said. It takes that idea of, okay, I can trade my sheep for this fish, which may not be equal, but we really can't divide these things up. We'll kill the sheep if I have to do it. So the trade isn't necessarily equal. So we could use precious metals to measure value. And now we have a system where we have to employ all these other different parties to facilitate a transaction because we're not actually physically next to each other. And Bitcoin solves that problem of involving so many other people, simplifying that transaction over the internet. I mean, I think that's huge. And I think that the sooner that people realize that that's really the goal, I think Bitcoin's going to continue to just skyrocket. So, market's improving. The use cases for Bitcoin are going up. I think people are realizing the value behind Bitcoin, and I think volatility is just a byproduct of this new asset class and the fact that it's worth so much more. I don't think it's never a straight line. It's always going to do that. So just something to pay attention to. I just love that. I might post it somewhere. It's great. Anyway, so that's for the market recovery segment. That's all I had for that. The next one is, I already put the meeting notes up there. Next one is proof of our ProgPoW is EIP 1057. So we actually have an Ethereum improvement proposal that is associated with this. So there's been a couple developments that have occurred, and ProgPoW is very important for GPU miners because it kicks off ASICs, and it will basically allow us to earn more Ethereum per day, irrespective of the price of Ethereum. I think the more important metric is how many Ethereum per day can we mine, not what is it worth right now. I think it's going to be worth way more well after mining is no longer a thing with Ethereum. So it's really about how many Ethereum can we get right now. So a couple developments here is, well, first let's talk about, yeah, I guess I did touch on that just now. The effects, so basically we want to reduce the effects of ASICs. We want to make sure, the ASICs are impossible to, you can't stop people from making ASICs, but you can minimize the advantage that people have over ASICs, have with ASICs, from 100x like a Bitcoin's ASICs down to maybe a 10 to 20%, which I think is the touted number for ProgPoW. So these are the goals. We want to level the playing field for those with commodity hardware. Anyone in the world can just plug into their computer and start earning some Ethereum. That's the whole point. We don't want one company developing chips and shipping them out and shipping out the chips only when they can no longer make money on those chips themselves, and then they can turn around and make a more efficient chip. So I think it's really important that we continue to focus on commodity hardware as the avenue for earning crypto, and the ProgPoW is the embodiment of that argument. And a lot of other cryptocurrencies are pushing for that as well, like Luxcoin, I said, which is X17, which is, again, those chain of algorithms that you can't make an ASIC for very easily because it's a chain of different algorithms, and X16R, which randomizes all of those. So all of these are attempts, and then usually have been thwarted by ASICs. So an attempt and a thwart, because there's a powerful incentive to build them, so people do it. ProgPoW is a novel approach in that it was designed around the GPU and to use every part of the GPU, so that if you want to make an ASIC, it has to resemble a GPU for the most part. So that's their approach, and it hasn't been tried yet. And it's a really interesting, and the fact that it's being considered for the second largest blockchain, I don't count Ripple, has a lot of merit. So what's been happening? There's a company called the Ethereum Cat Herders, and a part of the developers meetings is that they wanted to have somebody audit the code or pay to have an audit done by a third party to make sure that it can achieve these three things listed on the page here. And so basically, the Ethereum Cat Herders said, "Hey, let's spearhead this." They put in $15,000 in DAI, which is a Ethereum-backed U.S. dollar stablecoin, and they're trying to get to $50,000 to pay for this audit. So if you want ProgPoW to go through, I'll put this in the show notes page. Please donate. This is going to dramatically impact your farm, your rig's profitability, and I think it's level the playing field to make sure that the distribution of Ethereum is the most level across the planet. So definitely check this out. I'll put this in the show notes page. The last thing related to ProgPoW is that we put up a carbon vote. Carbon votes are really cool in that basically it allows anyone with Ethereum to vote with that Ethereum without actually spending that Ethereum. You just can prove that you own it by sending the smart contract to this address, and you can vote yes or no in that smart contract to vote for or against ProgPoW. And right now, it looks like there's been, and you vote basically with how many Ether that you have. So 200,000 Ether vote no, and it looks like almost 3 million Ether vote yes. Let's actually refresh this. I'm curious how much. I actually forgot the last number I just looked at. I don't know how much it went up, but nothing's really changed too much. But it's overwhelmingly yes. Every single vote I've seen is yes. This is actually, they're asking people to vote who have a stake. So I think this is probably has the most the most credence to it, but it's still overwhelmingly yes. I think ProgPoW is going to go through. We're just trying to raise money for the audit, and then we'll get it included in the Istanbul fork in October, which should give us at least a year's worth of ProgPoW mining, which I think will, this is my personal opinion, cut the hash rate down by 40%, which will be an exact replica, 40% increase in the number of ether that you would earn on your per your GPU. Massive. So something to pay attention to as an Ethereum stakeholder and as a hardware owner. Definitely take a look at that. I'm gonna go back here because let's just reload this and see where we're at. Okay, so we're we're hovering around 4,900. I knew we were getting some resistance near 5,000. I wanted to give a couple a little bit of company updates because I think we're kind of at the scale now where I feel like I can start sharing these numbers and I'm pretty proud. So um, we have 1,500 GPUs online, a little bit over 1,500 GPUs. We're earning about or we're sending about $20,000 per month in revenue to our clients. We are configured for on each rig. There's 15 different miners configured to mine various algorithms as the market dictates is the most profitable. We've got state of the art uh, custom software that would restart rigs when they go down. Like it's basically building a new data center from the ground up. That's been a really fun experience, and we're getting to a point where it's I- I'm just really proud of it. It's really cool, and I want to thank you guys for allowing me to build it, allowing us to build it, uh, Jimmy, me, and Izzy. Um, we've got a 92% renewal rate from our clients to date, which is remarkable considering how rough things got for a little bit there market-wise. But thank you guys for your support, and I think we're turning the corner here, and I'm really excited for what's going to happen here in this second half of the year. So in conclusion, there's a couple things I'd like for you guys to check out. Last week I had this is the quintessential Andreas Antonopoulos is the best resource for anything Bitcoin and Ethereum related. The guy knows his stuff. He speaks everywhere. He's articulate. He's educated. Just really, really awesome guy. But this week I'm kind of digging into the back alleys, not as well known. But this guy's name's Zcoin. Actually, oh shoot, I think I actually brought him up before. But he posts these more relevant. Oh, my headset turned off there because it wasn't playing anything. More relevant to like GPU mining. And you can check out a couple of his videos. I think it's a little bit more advanced. I think Andreas is giving you a lot of the simple implications of Bitcoin, kind of avenue, and his guy's talking about more ROI, different coins to mine with your GPUs, et cetera, et cetera. So a lot different, very, very different target audience, but nonetheless, I really enjoy this guy's videos, and he's got a really cool Shiba Inu, really cool looking dog. So that's my YouTuber or personality of this stream that I'll let you guys go home and check out. Three other, or I guess one other thing to share is there's other use cases for computational clusters. So cryptocurrency mining, verification of transactions, or payment network security, however you want to label it, is the first and obvious use case for a computational cluster, GPU-based or ASIC-based computational cluster. Some of the other ones that are more lesser known that are starting to pick up some steam are artificial intelligence, offsite rendering, and what was the last one? I think it's like, I mean, we'll talk about it. So the first one is Golem, and these are companies building these tools for anyone at home, really, if you have a GPU, or to the scale that Big Capital Group is, to connect and get paid for your times given to whoever needs it. So Golem is this centralized network for sharing and leveraging large amounts of computing power, and that's pretty general. It can be the artificial intelligence, it can be offsite video game rendering, it can be 3D images, it can be protein folding. for medical research. This is just a way to basically crowdsource computational power, and it's going to be cheaper than renting out your server farms with Amazon because it's basically the only cost of the people's electric power over the spread out over the world. It's a decentralized way to get computational power. It's really super cool. So Golem is the first one. It's actually built on Ethereum. So you would get paid in, I believe you get paid in Ethereum. They've only got one use case out right now, I believe, called Brass Network, which is a 3D rendering thing. But this is something to follow. I participated in their ICO a while ago. I'm big fans of what they're building. Sonam is a direct competitor. Um, and I think they're focusing more on the machine learning AI side of computational cluster use case. I think you get paid in Sonam for your time, and they actually have something online. Their mainnet is live, and actually I click on this here, and it looks like there's 174 current deals. You can actually run a profitability calculator to see how much you can earn. Um, awesome that they've already got this online. Last one is Vector Dash. This is an offsite rendering, also artificial intelligence, I believe, platform. So imagine you're on your Chromebook or your MacBook and you want to play, a game in 4K, or some of the Macs are 5K. Obviously, your Mac can't handle that. I mean, I worked for Apple for 3 years. I'm a gamer. Macs are awesome. I have one. I have my iPhone. I just think Apple is great for mobile, but I want power when I'm at home. But this is an interesting solution in that you can render the frames for the game at, let's say, Bit Capital Group or at home if you want to get paid for your time, and you can send it to the computer that can't actually handle that rendering in that real time, given your latency is low enough, which we're getting there. With fiber is very possible. It depends on where you live, really. So those are three things to check out. That can leverage computational clusters, that can leverage your computer at home, that you can participate in, that are made possible through cryptocurrencies and decentralized systems. And it really just opens up a whole new world, a whole new way to participate in the economy. So I'm all on board with this stuff. This stuff's really cool to me. Um, highly recommend you guys take a look at all these things. So with that, that's it. That's my conclusion. This is by far the longest live stream that I've done, and I'll just leave it at that. This is Demos fan. I'm a big fan of him. He just unveiled his cube. But thanks for tuning in. I'll put the show notes page in the Discord. I'll post this on the Twitch channel, and we'll plan on doing the next one on Thursday. So 2 weeks from now, Thursday. So let's pull it up. I'll be in Florida then. I'll probably still do it. Let me think about it. Because I'm back. Oh, I'm actually back that day. Let me think about it. I don't know if I want to do it that day as I get back, but we're doing one in 2 weeks, maybe a little bit over, maybe 2 or 3 weeks, and we'll get the sixth one online, and then go from there. So, thanks for tuning in, guys. Of course, if you have any feedback, let me know in Discord, email, anywhere. I'm available. Thanks, guys.